Welcome back to our video series about binary options. In this video, we're going to focus on creating a trading system with an edge so that you can beat the spread over the long term. Earlier in our series, in our video about payout levels, we learned about the spread. And the spread is the potential profit for the broker, much like the casino in a game of blackjack. We learned that the spread means that you, as the trader, need to develop a trading system with an advantage or an edge. So that means more than 50% of your trades will need to be successful in order to beat the broker's spread. We used the example of a binary options trade with a 75% potential payout, and we determined that you need to have a 57% success rate on these trades in order to beat the spread. And with a little bit of skill and a little bit of experience, it can be easy to develop a profitable trading strategy that consistently beats that spread. So how do we develop a profitable trading system? Well, in any successful trading system, it's important to have a series of potential trading strategies in your trading tool belt that you can use. Within your binary options trading system, you want to be able to look for the right tool, the right trade, to fit the current asset and the current market conditions. Your trading tools will help you figure out what to trade, when, and in what direction. Some traders will focus on only one style of analysis. For example, they might be looking very heavily at the fundamentals or technical analysis. Other traders will use combinations of these types of analysis in order to make money. Each trader has to develop his or her own trading style. If you need help getting started to develop your trading strategy, you can go back to our video on charting, where we talked about some basic technical trades that you can try. Or you can see some of our more fundamental trading strategies in later videos. Basically, any type of trading strategy that you can apply to any asset can also be applied to binary options trading, and in fact can usually be applied in a more simple way. Regardless of what style you choose, you'll need to develop a few different trading tools for your tool belt. This way, you can always choose the right tool for the job. But first you need to work on and develop each tool one at a time. How do you do that? Well, you typically want to start with an idea, and that's what we just discussed. Maybe you want to look at technical analysis or fundamental analysis. Maybe you have a more specific theory. You want to start with a general idea. And some traders are very formal, and they create a document that's going to list a lot of different aspects of their successful trading strategies. And I recommend that you keep some sort of document, whether it's quite simple or whether it's quite formal. But if you're new to trading, your document will help you remember what you did right and wrong. In this way, you can really learn as you go. So the first thing you want to do is you want to start by listing all the ideas that you have. You might have just a few, you might have many. Over time, you're going to add to that list as you develop each trading strategy. You'll typically want to focus on one asset class at a time, so asset classes would be stocks, commodities, currencies. Over time, you might develop trading strategies for each asset class, but we usually do them one at a time, or at least focus on them one at a time. And within an asset class, you'll probably focus on certain securities or assets. So within currencies, you might stick to a list of just a few pairs that contain your home currency or the major pairs, or you might have just a short list, maybe 5 pairs that you follow and know very well. Regardless of what you pick as your assets, all this information is going to go into your document. Then you want to lay out a framework for trading each asset during the day. And that's when we talk about timing. So, for example, certain key times are going to be important for certain currencies. Within the US, economic data and announcements come out at 8:30 a.m. Eastern Time, and they can move the currency a lot. So you want to make sure that you know the schedule of announcements so that you're not caught off guard with a big move in your underlying just when you placed a trade. You want to be aware and you want to be cognizant of those moves and when they're coming so that you can use them to your advantage. So your document should include things like that. It should include times that you're going to stay in or stay out of the market. Your document should also go into a lot of detail about the idea for each trade. So you want to be as specific as possible. detailing the underlying asset, what to buy, calls or puts, at what time, for what expiration. And even if you don't know right away what's going to be the best strike price or expiration, you want to write it down what you think. And then you try with some small trades and experiment. When you put real money into your trades, you're going to learn a lot more quickly what works and what doesn't. And you can learn from successful trades. You can also learn from trades that maybe weren't so successful. Every time you do a trade, I suggest you do a post-mortem. And a post-mortem is just an analysis of the trade. What you did, how well it worked, and what you can possibly learn from that trade. It's possible that you did everything right and you were still wrong on the trade. That happens sometimes, but you want to increase your winning percentage as much as possible. So your post-mortem analysis will help prevent making the same mistakes over and over again. It'll allow you to increase that win percentage. And while we're on the subject of multiple trades and your win percentage, your strategy should also include a framework of how much capital to commit to each trade. And that can go in your document as well. Having that framework will reduce the temptation to make risky bets with a significant amount of your capital. Because remember, you can't be right all the time. And typically, you don't know when you're going to be right. If you knew when you were going to be right, you would only place those trades. Your strategy might include a framework for allocating more capital or less to certain trades, but you want to be as disciplined as possible about sticking to your strategy, because this is how you're going to make money consistently over time. In one of our earlier videos, we talked about diversification as a risk management tool. And typically when we talk about diversifying, I like to start with the number 20 trades at once. I like this number because it allows you to spread out your risk. If you lose money, each trade is only 5% of your capital at risk. But I feel like 20 is a manageable number. You may find, though, that over time you can handle more trades because maybe you get faster at doing the analysis. Or you may find that you need to focus on fewer trades if a significant amount of analysis is required to make each trade. You don't want to feel like you're rushed and can't make good decisions. You may also find that initially, as you're working through trades, it takes you a long time to make decisions, but over time you gain confidence and you get faster and faster, and therefore you can spread out and take on more positions at once. The next piece of advice is to keep a spreadsheet of all your trading positions. You want to keep track of the underlying asset, the asset class, strike price, entry time, expiration, and direction. And this will help you track successes and failures. You'll be able to analyze your strategy over time because you may find that you have more success with your strategy either on certain underlying assets, in predicting up moves, or at certain times of the day. And a spreadsheet will help you see that at a glance and figure that out. Once you have your document and your spreadsheet set up, use them. Use them to evolve, to iterate, and to perfect your trading strategy, because these are your tools that are going to help you create your profitable trading system. Even though the broker spreads mean you need to be right more than 50% of the time, with a good trading strategy, you'll be able to do that consistently and make a lot of money trading binary options over time.